S&P 500 and NASDAQ hit new records, and I think the short squeeze will continue. I will explain what short squeeze is. Precious metals, however, took a tumble today on stronger dollar following the jobs report, and let's see if this downward pressure will continue on gold and silver. Natural gas has re-entered a new bull market, and crude oil is still under pressure, and it could continue lower. And subscriber asked for analysis of wheat futures. We will look at that at the end, so stay tuned. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 7, 2024. As always, please hit the like button, subscribe to the channel, make a comment, share this video. These actions are what keeps this channel going. Thank you again for doing them. And if you're a subscriber, stay tuned. We will cover quite a bit of various securities. For example, market breadths, Bitcoin, and Ethereum would be in the members only section. We will also cover various ETFs, including Bitcoin miners, large cap stocks such as IBM and PayPal. They look kind of good, as well as various more speculative securities such as Confluent, Doximity, Cloudflare, as well as various gold-related ones. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market support resistance indicators. You can see them on this chart, those green, blue, red, and yellow lines. These indicators are available for TradingView.com. You can find out more about this by going to the description of the video and following the link. All right, let's look at S&P 500 first. So I pointed out to my subscribers this week, actually, this potential triangle consolidation. I kind of highlighted it. So the more important one is this date, the 3rd of June and the 4th of June, so Monday and Tuesday of this week. You can see that the Tuesday's candlestick on the 4th of June was entirely within the range of the previous candlestick. So that's a classical kind of, it's called an inside day. You can also think about it as a triangle consolidation. And also we had this low from May 31st here. So I kind of drew in this potential triangle consolidation, and on the 5th of June on Wednesday we got a breakout and a move higher. So these are actually all-time records that we just hit again. So all-time records were hit on the 5th, the 6th, and today on the 7th of June. So pretty obviously a bullish chart. We will continue monitoring this, but usually when people who think that market will go down, will continue lower, they usually put their stops above the previous highs. So previous high was right there on the 23rd of May. So normally people would put their stop right around that area. So let's say you went ahead and you sold it short, for example, here on the 24th of May, you were successful for a few days. And if you were able to get out, or at least partially take profits, or at the very least move your stop to entry, then you would have been okay. However, if you normally put your stop above the previous highs, then you would be already stopped out by now. So for, on the 5th of June, on the 6th of June, and today on Friday on the 7th of June, new highs were made, meaning that people who had their stops above previous highs were forced to cover. And when you're forced to cover, it means you need to buy the stock on the open market. The same goes for puts. If you bought puts here, that means you need to either sell your puts or do nothing, in which case your puts will expire worthless, but you would have lost your premium that you paid for them. But again, normally people put their stops very close above the previous highs, and when the new highs are hit, we get what's called a short squeeze. In other words, new highs are hit, new stops are hit, new short stops are hit, and more people are forced to cover, meaning that they need to buy in an open market, and the price continues higher, more stops are being hit, more short squeeze, and this continues until all the stops are taken out. So for now, we're looking at S&P 500 hitting new highs, and this could continue for some time as before. We've been hitting new highs non-stop, basically. You can see this monster run, really. When will this stop? How long is it going to continue? When are we going to have a recession? It's anybody's guess, really. I'm reading right now Wall Street Journal, and people are very surprised. So very smart analysts that wear, suit and tie on TV, they're still saying that very surprising what's happening right now. We have very strong economy. We have people, even though things are very expensive, the interest rates are higher. By and large, things are looking okay, and the stock market is reflective of that. So when will we see a recession? Well, we will know for sure when it happens. But for now, I continue saying that we need to be long. I am long. In other words, I bought S&P 500. I bought it back in October of last year. Why did I buy it? I mean, it's pretty obvious if you simply look at the chart. We had a previous records, previous highs set here in July of 2023, and then we simply pulled back towards the blue support resistance line back in October of 2023. This is really all I needed to know, because that means that the security, in this case S&P 500, is now sufficiently oversold to warrant a relatively low risk entry. Because when I bought here in October, I put my stop at the yellow line, and that distance to the yellow line was not particularly huge. It was about 9%. Let's pretend for a second that back here in July of last year, I thought, oh my God, we're going to go to the moon. I'm going to buy it there. I would have put my stop at the yellow line. My stop would have been 20%. You see the difference when we see a pullback? When we see a pullback towards the blue support resistance line, I think it's a much better entry. So you literally have half your risk. So I went ahead and I did that, and I'm still long on half of my position. I did take profits. I sold half of my position, but by and large, we're now at new records. So I don't see really a reason to sell. Same goes for QQQ, NASDAQ. So again, these are all-time highs. Record highs were just set again. As far as QQQ is concerned, the last opportunity was about a year ago, a little bit over a year ago, when the security NASDAQ hit a blue line right there where I'm hovering, and then basically you just buy it on that pullback. Notice that in October it didn't even get to that relatively deeply oversold levels, so there was really no opportunity. Me personally, I bought actually even earlier, and this was very unusual because it's sort of like bottom picking. But at the time, this was back in January of last year, 2023, I thought that this whole bearish phenomenon of bearish thinking was definitely overdone. And I went ahead and I bought back in January of 2020, and I am up. Let me see. I'm still holding about half of my position for the NASDAQ. I'm up 65% on the position remaining, so clearly a very good trade, and I'm going to probably continue holding it. There's no point selling it at this time. As far as looking at the future, we are basically just long at this point, and we're waiting for any kind of pullback, but that pullback is just not materializing. So we're looking at other securities which did pull back towards the blue line, and we're looking to buy those. But for now, I would keep long, basically. Let's switch gears. We're currently looking at dollar currency index, DXY. So on this chart, again, it's pretty obvious. We're closing above the blue line. You can see those upward facing arrows. and these are closes above the blue line, meaning that these are buy signals for the dollar. Okay, so despite everything, the dollar looks attractive relative to other currencies if you trade currencies. Additionally, a very telling sign actually happened twice. First time this telling sign happened right there in December of 2023 last year, when technically speaking this was a downtrend in security. Notice where I'm hovering on the 14th of December, an actual alert to sell the dollar short, but notice where it bottomed right around the yellow line. So this support resistance lines that I'm providing really mean quite a bit, and notice that if we see this type of bottoming pattern around the one of the support resistance lines, it's a good sign to me, showing that I think we're overdone to the downside. We didn't really break down below it. And then notice that we went ahead and we went again, closed above the blue line where I'm hovering on the 5th of February. And then again pulled back towards the red line now in this case. So in March of this year, 8th of March 2024, notice we bottomed right around the red line. This is again a very good sign when the security follows this high lines. And again, we're starting to break out multiple signals. Latest one today. So this big candlestick is important indeed, and it's very telling. So this is, I mean, the size of this candlestick is also quite telling. It's a giant, very large candlestick. It also has, it's very large green candlestick. It also has closed next to the session highs. So it's basically one big green candle. And it wiped out almost entire effort by the bears. So starting from 30th of May until the 6th of June, until yesterday, Thursday, the bears were really trying to push the prices lower, but no, looks like bulls are now in control, meaning that dollar will strengthen. And why do I care about the dollar? So let's look at the correlations. Here's gold and the upper pane of this chart, and then in the middle pane is the US dollar, and down below here is what's called a correlation coefficient. So how much does the gold do the same thing as the dollar? And if you can just look at this purple line down below here, you can see that vast majority of the time it spends in a negative territory. So that means that if the dollar goes up, gold usually goes down. If dollar goes down, gold usually goes up. So right this instant, and for the past few months really, correlation was really quite positive. We were in the 70s area, so 70% of the time gold and dollar pretty much did the same thing. But notice that the correlation has been finally getting back into the normal territory when it's negative. So we're curving over back to normal territory, meaning that right now, if the dollar goes up, gold should be going down. And indeed, this is what happened today. We had dollar strongly rally, very big candlestick, while gold, and in a second I'll show silver. Here's gold, XAU divided by USD. So this bottom part of this equation, US dollar, just got bigger. Okay, it just got bigger. So this bottom part of this equation, US dollar, will pull this currency pair lower. So gold will be pulled by the stronger dollar lower, and it's indeed what's happening right now. So this is a very large reversal type candlestick. It's definitely the largest red candlestick that I see, I don't know, since possibly this one, since December of last year. So it's bearish engulfing. Okay, so it engulfed this big red candle from today. It engulfed the 6th of January candle, and it engulfed a whole bunch of previous candlesticks starting from the 23rd of May. So all of this efforts from 23rd of May until yesterday, actually I thought that we're gonna go to new highs yesterday from the 6th of June, completely negated today. Big red candlestick on top, on the heels of stronger dollar, basically. So what does this mean? It's possible that we have seen the double top for gold. This could be the double top. So first top right there in April of this year, and there's a second top from the May of this year, from 20th of May. Maybe this is it. Maybe we've seen the highest prices for gold for a while. We will know very shortly if that's indeed the fact. Let's briefly also look at the weekly candlesticks for gold. So here is XAU divided by USD. This is a weekly candlestick, and again, this candlestick is not particularly great looking where I'm hovering from this week. So we have a large shadow at the top, meaning that there was resistance at the top, meaning that the prices were initially the bulls really tried to push the prices higher initially, but the bears came in and said no, and then pushed the prices lower. In fact, the prices closed next to the week's low. In fact, you can see that the week's low is the lowest close since April of this year. So the road is really quite clearly right now to the pullback for gold, for gold to continue. And I'm thinking that at the very least, the move most likely will continue towards this blue line, basically. So blue line is currently at around 2200, so I think we will continue lower. At that point, we'll need to make a decision. Do we want to be buying precious metals, or do we want to do nothing? And with dollar gaining, it's going to be a difficult decision, I'll tell you that much. But let's cross that bridge once we get there. For now, I'm gonna try to stay way out of gold related and just see what happens in the next few days. Here's silver with a very similar type of reversal today. Big red candlestick, a close at the lowest level since May of this year. So a break, multiple support breaks. I think easily we'll get to $28, which is a blue line. Right now we're at 29. I think we will get to 28. There's a very good chance of that. Once again, previously, notice this upward facing arrows around the blue line. Previously we bought around there. At this point, I don't know. We will need to watch what dollar is doing. Let's switch gears again. We're looking currently at natural gas. Many people trade natural gas. Very few succeed. If you have never traded natural gas, I advise you don't. There are so many other things you can trade, like stocks. They're so much easier to trade. Natural gas is very difficult. It's super volatile. And if you're wrong, you can get wiped out very easily. So I've done my fair share of trading, and I have, basically figured out how to deal with natural gas, and that is to open a very reasonable sized positions. Example, let's say you have a $100,000 account and you want to buy natural gas. Let's say you want to buy a UNG, or you want to buy BOIL. This is a ETF called BOIL. Okay, again, notice that I'm analyzing natural gas futures, NG1 exclamation point. If I analyze BOIL, the chart is completely different. Okay. I just bought it today, but I would not have bought it based on the lines. So that's why I'm looking at the natural gas futures and G1 exclamation point. Notice what happened today. We had a breakout above the blue support resistance line. So that means we're now in a new uptrend for natural gas. A big giveaway was this gap up between 25th of April and 26th of April, and afterwards notice that it just continued higher. So now we have a breakout above this blue support resistance line. Officially, natural gas is now in a new uptrend, and we will consider buying it on closes above the blue line. I actually went ahead and I bought a position in BOIL, meaning that it's an ETF called BOIL, BOIL. It's a double long ETF, meaning that if it continues higher, then my return would be double of natural gas futures, basically. Okay, so that's natural gas. I think again we're breaking out into a new uptrend. And let's finish up today with a request from subscriber. So again, if you have a YouTube, you just make a comment. I will, hopefully get to the analysis sometime in the future. Of course, you can just sign up on my site and be your own best analyst. Okay, looking at the wheat futures. So we're looking at wheat right now. Wheat has been in a downtrend where I'm hovering beginning in June of 2022. Why? Because it broke below this red line where I'm hovering. That's really all I needed to know. So you can sell it short on once it touches the red line again. So for example, we had opportunities to sell it short. Okay, so for example, we had in June of 23, in July of 23, again in December of 23. Very successful. Finally, we had an opportunity to sell it short in April of this year, which was not successful, and we are seeing a breakout into a new uptrend, or so it seemed at the time. There is the breakout into a new uptrend that occurred on 13th of May of this year. Didn't really last, and we see a large amount of selling. And look at this. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row of red candlesticks. Additionally, notice where it ended. Today's candlestick, we touched the red line. So at this point, we're basically retesting the support at 618, whatever that means. Retesting support. Important to watch here, if we bottom out here and then rally, that means we're still in an uptrend. However, if we break below this level and close below it, then most likely this breakout into a new uptrend has failed, and we will see actually lower prices for wheat in the future. That's it for this week's recap. What do you guys think? Make a comment below. What do you think about any of the securities we covered? Wheat, natural gas, silver, gold, dollar, S&P 500, or any of the stocks? Make a comment below if you have any questions. For example, you wanted me to analyze a security of some sort. Make a comment below. I'll try to get to it. Other than that, head over to MasterChartsTrading.com. Click on sign up. And sign up for one of the products. So again, I have the trading indicators, which you can see on this chart, this green, blue, red, and yellow line. They're available for this interface, tradingview.com. Tradingview.com is free. All you have to do is open an account, free account there, then come back to Master Charts Trading, sign up for the indicators, and once you do that, I will open the door for you with your user ID on tradingview.com. I don't need your password to open your so that you can see my indicators on your chart. If you just want the newsletters, I send out daily alerts and weekly members only video. So for example, this week we'll be covering various securities such as Bitcoin, market breadth, treasury bonds, China internet looks interesting, some of the large cap stocks like Apple, United Health, as well as the speculative securities like Palantir, Vornado, Realty, as well as Norwegian cruise lines. So that's the newsletter. And of course, the best deal is to get both trading indicators and newsletters. Currently, we have a 1-year subscription deal. If you get it for 1 year, it's $599.95 per year, which is equivalent to $49.95 per month. And if you were to sign up monthly, the same price would be $59.95 per month. So obviously, best to sign up for the year ahead. Thank you again for watching all the way till the end. Please don't forget to hit the like button, subscribe to this channel, make a comment, share this video. And thank you for watching. Have another great trading week. Bye-bye.